Hello and welcome to the Market Bull podcast. Please note, topics and stocks discussed in this podcast are not financial or investment advice. Before this episode starts, I just wanted to thank you, the listener, for the continued support you've shown the Market Bull podcast so far. Since we started the show, there's been overwhelmingly positive feedback, and it's just been an incredible journey. We have great plans to further develop the show, so thank you for taking the time to listen to me each week. If I can ask one favour of you, it's to please hit the follow button and review the show on whatever platform you're listening to us on. Today on the show, I spoke with Miles Bradley, a co-founder and the Chief Financial Officer of Envision, which is a Web3 marketplace that utilises blockchain for stock media creators. Miles started the conversation by discussing his background in the finance industry and how through his own personal dealings with normal practices, he noticed an opportunity to utilise blockchain and improve segments of the market. Miles explained some of the key aspects of the industry and broke down what the blockchain, Web 3.0, non-fungible tokens, and cryptocurrencies are. With all of them having different applications, Miles drew on some real-life examples and practical use cases for the growing technology and addressed some of the myths surrounding the sector. I hope you enjoy listening. So hello and welcome to the Market Bull podcast. I'm your host, Ben Kostrich, and joining me on the show today is one of the co-founders of Envision, Miles Bradley. Welcome to the show, Miles.
Thanks for having me, Ben. Appreciate it.
So your current role in the company, you're a co-founder, which has, I'm sure, a fascinating story behind it, and you're the CFO or Chief Financial Officer. But before we dive into all that, just give us a bit of background about yourself and how you have emerged into this side of the industry, which we will dive into a bit later as well, which is quite complicated and interesting.
Yeah, cool. So I've got a background as working in corporate foreign exchange, so essentially helping sort of medium to large businesses with managing their foreign currency risk and delivering cross-border payments. Was working over in London and I guess had exposure to a lot of businesses that were based all around the world and sending funds to pretty interesting places, and I guess found there was a few inefficiencies with that system, that process that has been around. It's quite clunky, archaic, fairly expensive. It was kind of around the time, sort of 2016, 2017, when Bitcoin started, performing well. So it was starting to see it pop up on CNBC and Bloomberg, and I guess more from an investment perspective, started looking into it, trying to push some of my investments out in the risk curve a little bit, but then started learning about what it actually was and the concept of blockchain. And that's where I then started to see how it could actually be applied to, sending cross-border payments, for example. So, we were helping clients, let's say you're an English-based company needing to buy something from China, you'd convert it sterling into US dollars and then send the US dollars across to China. We're finding sometimes that might take 3, 4 or more days. The process, a lot of the time would go through maybe 3 or 4 different intermediaries before it actually landed with the client. And then sometimes those intermediaries would take fees along the way. So sometimes the value wouldn't even land in full. If we wanted to chase up and see where those funds were, sometimes we'd need to actually chase up, and get a swift confirmation. And, sometimes that was $20, $30. So just found there was a lot of different parts of that process which wasn't very efficient, and that's where I then found that with using blockchain, I could send, let's say is USDT, which is a stable coin pegged against the US dollar. I could send that to anyone in the world. It would take a matter of seconds. I could send them a confirmation as soon as I'd initiated that. They could see that my wallet had sufficient funds, that it was on the way, and just found, how can I do that as an individual so much more efficiently than what we could as a large business. So that's what kind of got me interested. I started doing a lot more, I guess, down the rabbit hole, diving into actual projects that use blockchain, why they use blockchain, how it affected them, looking at the tokenomics of these platforms. So that's kind of how my journey started. And then how I actually jumped in, I guess it was a friend, was a videographer and sort of film producer, and he was finding that he was selling a lot of his content as stock media. So selling it through Getty Images and Shutterstock and some of these big platforms, and finding that he was only receiving a very, very small portion of what that content was selling for, sometimes maybe only 15%. So basically we were chatting and using my understanding of blockchain and saying, look, is there a way that we can maybe make this process better or more fair? Or so that's where kind of the concept of Envision was created. We went about, set the company up, raised some funds, and then started basically building a platform, which is a decentralized application, which basically allows people to buy and sell stock media, so photos and videos and vectors and those kind of things.
Well, I mean, it's a great brief insight, but there's a lot of phrases and words and topics in there that would be good to go a bit more into detail, because the whole idea of blockchain, and we'll touch on some others later, but I mean, going into this and seeing the efficiencies being improved through blockchain in particular, I mean, starting then and just even doing the research and trying to understand what it was and its applications for an everyday person that sort of looks at this and goes, oh, discredits it, it's just another fad, it's just another sort of buzzword that's being thrown around. How did you go about learning about it, and how would you therefore educate people about its uses and describing it to people?
Yeah, so I think we really need to break down the different parts. So a lot of people have obviously heard of Bitcoin. They don't really know how that ties in with blockchain and what blockchain actually is. So blockchain is distributed ledger technology. So basically what blockchain is, it's a ledger of data or information that is verified by a number of people that essentially validate or secure that network. So that data or that information could be a range of things, but essentially it's information or data that is verified that it's true. So that's kind of the concept of blockchain and what it is. Bitcoin is a digital asset that sort of functions on using a blockchain technology. So it means that I can send a Bitcoin to someone. Basically, I'm sending information to a ledger. That information is then being verified by, in Bitcoin's case, miners. So people that are mining Bitcoin, they essentially verify that that transaction is true. And then once that happens, it then turns into a block, and it's essentially facilitated or confirmed. And that's kind of the concept of what blockchain actually is.
And I mean, thinking more about that, the beauty of you saying that these miners or these people that are authenticating and proving that it's a proper thing, it's not just one person, or I mean, how do you sort of authenticate that it's again, that decentralized word that gets thrown around a lot? Like, how does that all come into the blockchain?
Yeah, so there's different consensus mechanisms for different blockchains. So in Bitcoin, it's a proof of work. For Ethereum at the moment, now it's proof of stake. So these are the mechanisms behind how people verify that information is true. So if we look at the proof of work consensus mechanism, which is Bitcoin, essentially what these people are doing is they have hardware, so literal computers that are solving these complex mathematical algorithms. And basically, these computers are just running, and they're basically, once someone confirms or that computer confirms something, they receive a fee, and that fee is what someone's paid to have that information verified. So that's essentially, for Bitcoin, how things are verified, but it's a network of computers that are all around the world. The more computers there are and the more decentralized that is, the more secure the network is. But essentially, it could be any person, in Perth, there could be a person that's running a small Bitcoin mining rig, all the way up to massive big companies that have entire rooms and offices full with hardware, which is just constantly mining and solving these algorithms. And they're essentially professional Bitcoin miners that are getting rewarded for providing that computational power.
And I mean, that then I can see flows into where you saw the opportunity with Envision, and in particular like stock footage and photography, because when you were mentioning before about finance, there's always someone taking a clip along the way. You can see that with everything in every industry, and for stock media, for artists or for anyone taking content and trying to distribute it and make a living for themselves, there's always a commission, but it's always taken more from the host or whoever's providing the main channel for people to go and sell their product. Whereas this is in a way flipping it on its head so that each individual has more power and more control over their real livelihood and their income. So, I mean, diving through that and setting this company up, I mean, I can imagine you would have been going into a territory that hasn't necessarily been explored much, especially in Perth. being that, as we mentioned before, being predominantly mining. I mean, going through the process of setting this up and exploring this potential opportunity to where the company is now, how have you found that pathway going?
Yeah, it's been an interesting one. I think essentially we're a technology company. We have a team of developers that, we've got some based here in Perth and also some abroad. But I guess in terms of actually getting the company going and starting to build a product, it's probably not too dissimilar to any other software company. I guess the only real difference is that some of the language and the code that we're using is specific to blockchain. So a good chunk of what we're doing, I guess for us, it's really important to have a platform that is very user friendly. So a huge part of our emphasis has been on making the platform function as similar to a conventional stock media platform as possible. The only core difference is that instead of us being a centralized company that takes ownership of the assets and facilitates the distribution of content, the actual users or the people that are using the platform to upload and sell content, they actually do that themselves. So all we are is essentially providing the user interface or the sort of front end that these users can then talk to the blockchain, upload their content, turn it into non-fungible tokens, and then license and distribute their content out, and consumers can then buy or license that content directly from the creator. And there's no funds, or Envision ourselves as a platform doesn't actually ever take custody of the assets or of the funds. It's purely based off the actual users.
And I mean, there you mentioned the term non-fungible tokens or NFTs. I mean, I know particularly in Australia, it had huge publicity and almost exposure during, almost the past 2 to 3 years, along with blockchain and crypto. But I mean, how would you describe like an NFT for people? And again, what is that in regards to traditional methods of how technologies have been used to what an NFT does do in comparison? Where are the benefits emerging in that?
Yeah, so there's probably a lot of misconceptions around NFTs. I think when you see something like a JPEG or, a piece of artwork selling for, I think $69 million was what one sold for. I think, that's going to create a lot of noise. And then I think a lot of people then associate all NFTs with being artwork. Essentially an NFT, all it is it's a non-fungible token. So if we look at, say, Bitcoin or Ethereum or a lot of the other sort of cryptocurrencies or digital assets that people are familiar with, they're a fungible token. So one Bitcoin is the exact same as another Bitcoin. You can swap them one for one. Whereas a non-fungible token is unique. So essentially every single non-fungible token is not interchangeable with one another. So the application, the use cases for NFTs is pretty broad. I think, yes, it can be used for, providing ownership of a digital asset or a media file like a piece of art. But I think we're starting to see some applications now that are really exciting, and I think can be sort of now started to be tied back to real life assets. So, in terms of providing proof over whether it's a digital piece of media or whether it's something in the real life, that's where non-fungible tokens can really be used. We're also starting to be seeing them now used for investment vehicles. So there's prop tech is obviously a massive area that NFTs are starting to be used, where an individual that maybe doesn't have the ability to buy a massive investment property, they can actually divide that investment property into a range of non-fungible tokens, which then gives you an allocation of that investment. So we're starting to see use cases like that, which are quite simple and easy to understand in how they function. But all you really need to know is that non-fungible token is unique from another token, essentially.
And I mean, that creates the idea that the biggest emerging issue these days is authenticating and providing security. And you can already see it with the rise of AI. And I spoke with another gentleman the other week, a CEO, and we're talking about the ethical complications that are emerging through AI and not being able to verify potentially who something is or what something is. And in a way, NFTs and crypto potentially creates really is the opportunity to proof of concept and show that. But you'd almost say, looking for someone on the outside, there's almost been this perception that it's the opposite. It's this I don't know if it's the confusion or if it's the lack of education or if it's this unwillingness to learn more about it. I mean, how are you seeing that as a main challenge and obstacle for persuading or just encouraging people that there are genuine use cases for these sorts of technologies, and in particular relating it back to stock media?
Yeah, well, I guess it's the entire concept of it being decentralized is that you're not providing, that verification isn't being provided by one central entity. So I think now there's a lot of distrust with companies and governments, and I think we've seen that here in Australia with some pretty massive data breaches, with some, I guess, fairly sensitive information being made public. So I think with the blockchain, what it allows you to do is to securely upload data, but the concept of zero knowledge proof, which is essentially that something can be verified, it's then immutable, it can't be tampered with or changed. Once a block has been confirmed, there's no way to go back and change any of that information. So zero knowledge proof is kind of the concept that you don't need to know who someone actually is in the real life, in the real world, but you can see that this wallet has interacted or has been verified for this certain application. So there's some really good applications that we're starting to see. So with Southbound tokens, for example, which is essentially someone can verify that this wallet address, say, ticks certain levels of criteria. They then attach this token to that wallet address, and without needing to know who the actual person is behind that wallet, you know that that wallet has been verified and that it ticks these certain criteria. So, a really simple use case is you could access a wallet. Once someone turns 18, you receive a certain token. You don't need to know who that person actually is, but if you can scan that wallet, you know that that person is 18. So, like entry into a club, for example, that, just some of the like real world applications. That's a really good way of, getting around this issue of sensitive information and data. And it's completely tamper proof. No one can go in, no centralized company, government can tamper and change any of this information.
And is that where you see almost the opposition, the threat is that people don't want this because it defeats a lot of how modern systems have been built, and almost in a way it's a massive threat to the entire fiscal system, the entire way that business and the world operate, and in a weird sense that is been part of the reason that it's been labeled as this sort of dodgy, but this people don't give it the time of day because it's pretty much flipping the entire system on its head. And then, I mean, looking at the real life applications and where it's going, I mean, where else do you see this really emerging, using both blockchain and crypto? And I mean, from your point of view, leading it back to the company, because it's, at the end of the day, that's where you see the opportunity. Where do you see that really taking off and emerging in the near distant future?
Yeah, look, I think it really comes down to ownership. That's the big core difference that blockchain allows. So, if we talk about what Web3 is, so we had Web 1 was the first sort of iteration, which was someone could write information to the internet and then users and people could view that, they can read that. But that was it. So there was a lot of limitations. Web 2 was then existent, which is kind of, I guess, what we are familiar with today. So Web 2, if we look at a good example of Web 2, maybe Facebook's a good one. So the users and the people that are interacting with it, they can both read and write. They can share images, make comments, things like that. But Facebook, as a centralized company, actually owns all of that. So all that content is owned and controlled by Facebook. They then have all the ability to generate revenue from that, share that information, generate income from advertisements and put that advertisements towards people. Web 3.0 is the ability for people to read, write, and now own. So, looking at the Facebook example, there's a number of projects that are building Web3 equivalent social media platforms. So the difference here is a user would connect their wallet. They could then own and upload content. They retain ownership of all that content. They generate income from that. They can decide to sell their data to someone. Someone can then pay them directly. A really good example is with advertisements, you can actually control how and what you see. And if someone decides to put an ad or market on that social media platform, when someone views that, they actually receive the revenue from viewing that. So the person or the company that's uploading that content or that ad, they're paying that user directly. there's no intermediary there. So the whole difference between Web3 and the previous examples are basically around ownership. So yeah, ownership of data, people being able to upload their content, retain ownership. So I guess what that kind of means is that, if we look at this paradigm shift and flipping it on its head, you got to think about who are the losers, who are the ones that are worried about, forgiving their revenue. So, it's basically any centralized company, especially ones that have really wide margins over what their users are actually providing. Like, Facebook's a good example. And I think that's why they may be rebranded as Meta. Probably hasn't been a very good thing for the space. But yeah, ultimately, the reason that we saw stock media as being a really good application for it is the margins were absolutely outrageous. I think stock media creators didn't really have any control or ability. There's no alternative there. So I think what we sort of identified was the margin or the revenues of Web 2 is the opportunity of Web 3. So we saw some of these behemoths, the Getty Images and Shutterstocks of the world, absolutely dominating the space. And because they dominate the space, they could charge, 80+% margins, which is insane considering they're not the ones that are even creating the content. So that was why we decided to go down that route and create Envision. And I think every company that's out there that has a similar model where they are taking margin but not creating the content themselves, I think they really need to start, I guess, looking at different alternatives.
Yeah, because it is. They've got to start thinking that they actually have to do something themselves, because it's taking out that intermediate person or that company or that provider and really just getting that direct network and direct communication. And it all flows back to that everyone wants to take a clip along the road for really not even doing necessarily anything. It's just how the system has been. And that's where, you can see the giant threat that this proposes to so many of these companies and why there's this shift. But you can also see them in a way disenfranchising people from even approaching this, because it's a massive threat to them. They don't want anyone to really know about this new future.
Exactly. And I think as well, some of the biggest worries, some people might have heard of the term DeFi, which is essentially decentralized finance. Like going back to how it all kind of started for me working in corporate foreign exchange, the fact that I could send money to someone, it was instant, it cost essentially nothing. And yet there's companies that charge an absolute fortune for even something simple like money remittance, for example, whereas this now gives the user so much more control. So I think, they're the ones that are really going to start to see, I guess, a bit of a shift. And I think, it's a really interesting time as well at the moment. It's still very, very early. And I think, we've seen, maybe the last 12 months hasn't been a very good example for the space. We've seen a couple of, big companies go down. I think the thing that we really need to focus on is the fact that a lot of these giant failures that we've seen in the blockchain and digital asset space have been as a result of centralization. They've been centralized companies that are going down. If we look about Celsius, for example, which was basically a company that a user would provide their digital assets to, that Celsius would then generate income from that and then give some returns back to their users. But they had ownership of their users' funds. So I think what we actually found in the last final stages of them before they went down was they actually had a lot of loans that they had out in the decentralized finance applications, and they were forced to unlock any of that collateral they had provided to these protocols. They were the first people that the first place that their funds had to go to, which sort of like really amplified for me the fact that, if it's written in code is law. Whereas what we're seeing, all these failures are basically as a result of greed and centralization, which is the whole concept of why blockchain and Bitcoin was originally created. So look, it's a really interesting time. And I think the last 12 months have sort of, amplified some of the issues around centralization. And it's unfortunate that they've been tied to digital assets. But ultimately, I think we need to, focus on the fact that these were centralized companies that failed due to fraud or poor management, or, a number of different reasons, over leverage and greed. But ultimately, the decentralized applications, they still function and behave the way that they should. So I think that's really what we need to be taking from some of these major failures that we've seen.
So then thinking about almost disproving or dispelling some of these myths, I can imagine you would have had over the past 12 months a lot of voices, a lot of people telling you and almost telling you the news article or giving you some fact without any really evidence behind it. What have been some of those that you can happily say you can disprove, or what are some of the ones that you've been approached with and you've just gone, they've got nothing to do with the space. This is, again, as you said, people being greedy and abusing it and changing it away from what the purest sense of blockchain is meant to be used for, and pretty much getting greedy with it and trying to exploit it.
I think this kind of goes back to the very first thing we spoke about, which was what blockchain actually is. I think people focus very much on it from an investment perspective. And I think when people are looking at it from an investment perspective, all they really care about is the price going up. I think they forget about what's actually happening on a deeper level. And it's probably because we're still so early. And I think a lot of people maybe haven't gone out and been focused on doing any of the research themselves. They get told by someone that something's gone up 100% and they should jump on, and then it all goes pear-shaped and they've lost an investment, and then that kind of tarnishes the space somewhat. So I think really there needs to be more of an emphasis and a focus on blockchain technology and what the real world applications are, rather than just looking at it purely from an investment perspective. And that's why I think it's very easy. I could go home today, launch or create a token, launch that out there. I could get people to start buying it. I could very easily then pull liquidity out of a liquidity pool and basically scam people. So I think when the barriers are that low, it's obviously going to be a space that's rife for fraud and scams. And I think that's what we've kind of seen. And I think it's ultimately because we're still so early. There's not really any framework in place, and there's a massive lack of education. I think that's why the space kind of gets tarnished with a bit of a bad brush. And I think even us, like we're a technology company, but because we're associated with and using blockchain technology and digital assets, a lot of the time, we get the same sort of skepticism. But I think people really need to focus and understand that, a cryptocurrency is very, very different to blockchain technology. They're completely separate things. It's just that a cryptocurrency uses blockchain in the way that it functions, or the way that you verify, the value of it. So I think that's kind of the biggest misconception. And I think as well, people kind of get confused between Bitcoin and crypto and blockchain, but ultimately they're all very unique, different things in themselves. And I think this is probably why it's taken so long for us to put frameworks in place that make sense, because it's a very dynamic space that is constantly changing. New types of tokens are being created every day. So I think there's no one size fits all approach to regulating it. So I think that's why we're kind of seeing that's maybe a little bit slower than what we would have seen, with some other financial instruments. But I think, ultimately people just need to maybe focus more on the technology rather than looking at it purely from an investment perspective. But when people are getting rich, it's pretty hard
that's what everyone sees, and everyone goes, I can do that. I want to do it myself. And then that's where, I think that idea of anyone launching a token, building it up, and then I think the term is called a rug pull, where you pretty much inflate this cryptocurrency, and then you just take the liquidity out of it, and heaps of people lose money, but you make these staggering amounts of money. And I think I saw it on a documentary on Nat Geo, which was pretty much investigating this exact industry and saying that, again, that there's these evils people out there, but that's almost across every industry, across every part of the world. There are people that use this to their advantage to screw over other people in a bad terminology. But you can see that the decentralized model, it's breaking away from what we've currently had, and keep going back to, it's a threat to the current systems. And I mean, there's probably a lot to talk about in regards to how to keep it under control and regulate it, because as soon as you start regulating on, you can hear, I mean, I know in particular, China's trying to get their own cryptocurrency and go into that field, which then, there's implications of them having their own digital crypto, and then, the US is trying to do the same, and then that leads itself into, I think what a lot of people fear is that sort of control from the state, from the government, But that's where you can sort of see that unless it's hard. I don't really know where it goes.
It's terrifying. And I think, look, kind of going back as well to how it all started for me, I mean, transacting using digital assets is better than using conventional methods. I think the reason that it's better is why we're starting to see, banks and governments starting to release their own cryptocurrencies. But I think what's terrifying for me is the amount of control that would then give those governments or individuals. So that kind of defeats the whole concept. I think we've seen there's mechanisms that can be introduced into those smart contracts, into those digital assets that are absolutely terrifying. The ability for a government, for example, or a central bank to freeze your assets, seize your assets, completely track everything. And that's why I think that's another massive misconception, is that crypto or digital assets are really good for illicit or fraud or whatever. That's actually not true at all.
Completely. Yeah, everything gets tracked.
Everything is tracked. The origin, where it's sent, everything is tracked. So I think, that's a massive misconception. But I think, it's terrifying to see now, central banks really starting to push certain creation of digital assets, because I think ultimately what that's going to end up doing is giving them more control, more information over where and how people are sending their funds and how they're behaving, which again is kind of against the whole concept of what blockchain was created for.
Yeah. And I mean, we're talking about where this can go in the future. And I mean, it's hard to say for a person like yourself, when you see this having this as a click finger and it's almost adopted by a lot of people. But I mean, where else can you see this emerging over the next sort of few years? And I mean, from the devil's advocate, I mean, what would be things that people would try and do to stop it from taking off? But as we can imagine, if there are so many benefits for it, it's not about these higher ups or these powerful institutions stopping it. It's just your everyday person and your everyday sort of community getting around it.
I think we'll get to a point where every person will be using blockchain in some way throughout their day-to-day life without even knowing about it. I think, I was just at an event that UWA held, which was Web3 in WA. And I think some of the applications that they were sort of bringing up were extremely interesting. So, even from like supply chain, the ability to trace and track the origins of certain things, and for that to then be immutable and distributed and then public, it is absolutely incredible. So I think, we saw the ability for someone to put information, let's say the origin of a bottle of wine. You can scan a QR code. It will then take you to the entire process and supply chain that bottle of wine has gone through. And that through all of those stages, it's been put onto the blockchain and it's verified and that's true. So in terms of, being able to provide proof of origin, I think that's really like a huge use case and something that's probably a lot less scary and intimidating for people, because ultimately at the moment, it is still so early. I think the user experience is not great. It is still a little bit clunky, but I think like the amount of development that we're seeing in the space is skyrocketing. So even though maybe the price might be going down, the amount of development, the amount of commits, the amount of software developers that are working in the space and coding with blockchain is growing and increasing. We're at an all-time high. So I think it's only a matter of time before so many industries where there's an application for blockchain, it started to be implemented. So I think that's again kind of taking away from, it's different to cryptocurrencies. I think we will really start to see blockchain adopted in so many different industries, and a lot of people probably won't even be aware that they're using it.
It's just, it gets associated with you every day and you might not even know about it. But yeah, I mean, that sounds incredible. And I can imagine it will be used for anything. You're getting your car, as I spoke with another guest about the idea of scanning a car and it's got your ESG. And I mean, you can start implementing blockchain into that to properly authenticate that it actually is properly complying with those, as opposed to someone that, has done some sort of dodgy little paperwork to get away with it. There's all these applications and you can see that your transparency.
And carbon credits are a massive one that's started to be, there's a lot of projects now that are basically putting the ability to trade carbon credits on the blockchain. So, the auditing around carbon usage is a massive issue. And I think that's another really good application that we're starting to see. So from an ESG perspective, it's going to provide a much more more transparent solution. So carbon credits just another massive one that we're starting to see huge growth in.
And I mean, where do you see the Envision sort of going for the next handful of months? And I mean, I've been on your website and there's a lot of information, and I encourage listeners to go there, but I know you've got your timelines of what you're looking to achieve. And so far you've been ticking everything off, as I can see, but I mean, where do you see that the company progressing for the next, 6 to 12 months? And I mean, what excites you most about this industry and your current position?
Yeah. So I think, look, it's not going to happen overnight. And I think we're a two-sided marketplace, but fortunately for us, we're solving issues on both sides of the market. Consuming stock content is also quite clunky. Getty and Shutterstock dictate terms a lot of the time. But ultimately, we're providing more of a social benefit to a lot of these creators that have kind of, been overlooked for a long time. They don't really get much of a say. So for us, I'm extremely excited to be able to give creators, the ability to showcase their content, really promote themselves, create their own profile, share that profile with people. So for me, that's massive, and that really excites me and drives me every day. And I think some of the conversations that we've been having with a lot of our creators there's a huge level of sort of passion there, and the ability to now retain ownership, have control, and ultimately put more money into their pockets. So for me, that's massive. And I think, it's ultimately for our adoption and scalability. It's, we ultimately want to be getting to a point where we've got some larger clients that are purchasing millions of dollars worth of stock each year. And I think we're going to start seeing infrastructure improve. We're going to start seeing the ability for people to buy digital assets or convert fiat currencies, so Aussie dollars, for example, into digital assets. We're going to see that kind of infrastructure improving. We're starting to see custodial solutions improving, so the ability for a custodial to retain ownership, and then a business can kind of give control to the user or the different levels of individuals within the company. So we're starting to see a lot of that infrastructure being built, and I think that's really going to be crucial for us to make the process as easy as possible for our users. But I think we're at a really exciting point now where we've been busy building away. We're about to start scaling it and onboarding users. And I think that the feedback that we're receiving already has been absolutely fantastic, just from the way that it's going to change the way a lot of these creators sort of operate. And I think, like Getty and Shutterstock, the way that they kind of function is they take ownership. They then use a lot of the data information that they're collecting from the people that are consuming, and they then use that information and data to push certain content to certain people at the right time at the right price. So we're basically going to take all that information, give it to the creator. So ultimately we want them to be as well informed, what content's being searched that doesn't currently exist. We ultimately want to change the way that they function and the way that they create content, make them a lot more efficient. So it's a really exciting time, and I think Web3 is going to be huge. So I think it's a really exciting time that we're in right now.
Yeah, I mean, I can think off the top of my head, for content creators, not for Giddy and for Canva and for uploading content like that, there's these giant organizations that host it all, and this is empowering them that creators don't need to really obey to these terms and conditions, and almost in a way being a slave to the machine. They get full control over themselves, and it's going to be incredible for so many people that you hear they complain that they've had all their revenue taken because they haven't complied with a certain terms of conditions, and at the same time the company's profiting but the creator gets nothing. And it's this awesome opportunity for them to actually seize control, seize power, and actually again make something for themselves in a decentralized avenue. So I think it's amazing, and I can only see the industry rising 100%. There's going to be hiccups as it is, but I'm very excited to see where it is, and for listeners that want to learn more about Envision and yourself and learn more about the industry and really get education, which I think is key, where can they go?
So look, we push out a fair bit of content. We like to keep people informed, and obviously being a decentralized application, we're very transparent about how everything's functioning. But yeah, so you can reach us on LinkedIn or any of our socials. We're on Discord, Telegram, or our website as well. So yeah, we're going to be launching our main platform on the mainnet very, very soon. So yeah, definitely encourage everyone to jump across to our website or reach out to the team directly.
No, thank you. I think you've synthesized a hell of a lot of information in a hopefully an easy to digest format. Hopefully. But yeah, thank you so much, Miles, for taking the time to speak with me today. And yeah, I wish you all the best, and hopefully we can touch base in the future and see how the industry is going and where the applications are thriving. So thank you.
Really appreciate it. Thanks for having me.
Thanks for listening to the Market Bull podcast. If you enjoyed it, please make sure to like and subscribe. You can follow the Market Bull on our socials at Twitter and LinkedIn by searching The Market Bull. You can also subscribe to our newsletter on the website by visiting www.themarketbull.com.au.